Hey guys, what's up? It's Chad. So we had a huge day today. This is a big historic day. So let's get right to it. So down here in the bottom right-hand corner, we have the S&P 500, and the reason why today was so big is that we crossed this trend line. So I drew this red line that connects the high levels over the last 13 months from the high in May of 2015. And all these levels make a slightly downgoing trend line. However, today we crossed that. So right here we are. This is today. See, we crossed this red line right here, this middle red line. So we not only crossed that, we crossed this downward trend line from the last month. We crossed this downward trend line from the last 13 months. And the next point of resistance is right here. This is the all-time high of the S&P 500 set last May. So if we cross that, then a lot of buyers may be coming into the market. Now the crazy thing, I'm going to circle it for you. Right here is what we're talking about. The crazy thing is that on the same day that we had this incredible market action, TLT, which is a 20-year bond, 20-year treasuries, ETF went up. Gold was up again. Crude oil was slightly down today. So why did we get this incredible move? Of course, we all know that it's the jobs report. The jobs report came out and reported an incredibly large number of 278,000 new jobs created over the last month, and that's a huge deal because that means that our economy is doing well and that our earnings may increase over the next half of the year. It may indicate really good things for our economy going forward. However, there was some talk of the Fed today. Will they decide to raise rates because of that? Possibly, but nothing definitive. Next week we have a lot of talk from Fed speakers, so perhaps that will move the market back downward, but for now, a big upward move. The one thing that I did want to talk about was volume. So let's see. We're going to put the SPY down in this corner, and we're going to blow it up. And we'll look at today's date. The volume wasn't bad, but it was fairly average. Whereas last week, after the Brexit vote, we had really high downward volume. So if we're going to break out to new highs, generally you don't want to do it on average or low volume. So we'll see. Monday also starts earnings with Alcoa, so that will be the start of our earnings season, which will tell us really definitively how the economy is going. If we do break out over that 2134 level on the S&P 500, that'll be a big deal. There's going to be lots of fireworks, and we'll see if the buyers come into the market really strongly on that day. If you do want to be long, that's definitely a consideration, but I would probably wait for a definitive breakout. So this would be a breakout to new highs. We would have to close above the previous highs, and there would have to be decent volume. If we can stay above the last highs, then that may be a time to get long. Definitely a consideration. For now, this is a really tough place to trade. Do you want to keep hedges on? You know, the VIX is down into the 13s, so it may be a really great time to buy some protection, some downside protection with some puts. It's a really tough place to call direction. Anyway, for now, enjoy your weekend. Try to forget about this stuff for a day or two and check out the futures on Sunday afternoon. And hopefully that'll tell us what's coming. All right, have a good one. Trade strong.